I really think that it's the Russia-Ukraine crisis that to me creates the bimodal distribution more than anything else. So let's say, I believe, and just to be clear, I think the left hump is a little bit, there's a little less mass, let's say, in the left hump than the right hump in this case. So I think there's more upside than downside is what I'm trying to say. But if Russia-Ukraine continues, and we lose however much, it could go a number of different directions, but in a worst case scenario, you could lose more Russian production, brain drain from the West. Russia decides to cap production for some reason or cut production. They try and retaliate against the price caps and everything else. Things could get crazy in the oil market, especially in the face of a China reopening and OPEC, who's towards the low end of spare capacity. So there's an easy bull case. Bear case would be, let's say we wake up in 6 months and Putin is dead and everyone's got a reset in mind after this conflict, and things can somehow go back to some semblance of normal. It's harder for me to construct that case, but you can't rule it out. And if it were to happen, I think the at least knee-jerk response from markets would be to sell off the energy complex in oil. I think you would buy that dip because the big thing I think that's happened coming out of this is that we've re-rated energy security, and the idea that you can outsource your energy security to an unfriendly jurisdiction is bad policy. So that's one of the big table pounding conclusions we had coming out of Russia-Ukraine, was that we'd see a big re-rating, oil adjusted valuation re-rating in energy sector. And that has happened. That's why you see everybody kind of scratching their head saying, well, oil's down $60 a barrel. Why are energy stocks close to all-time highs? Well, it's because everybody's putting more value on those safe jurisdiction producers in energy security in general.